Okay, peeps, welcome back. So today we're going to be going over the YieldMax ETF's underlying stocks. This is basically what this means is whether, based on the underlying, whether we think that the YieldMax ETF itself will potentially move up or move down. So with that being said, let's get it. So the first one that we're going to look at here is Coinbase. Typically, we look at this alongside the Bitcoin miner stocks, but Coinbase just had a massive move. And as you guys can see, it also had earnings, which of course it completely destroyed earnings to the positive side. I mean, look at these earnings, plus 4,600%. If that doesn't say it all, I don't know what is, or I don't know what does, but as you guys can see, we had a huge move on the weekly. This was obviously, technically speaking, bound to happen. As you guys can see, this clear breakout here. But the move was pretty monstrous. It was about 40% or so. So we did close above these previous candles here, also above the resistance zone. As you guys can see, this is used to be support, then became resistance. Now it looks like it is going to be turned back into support again, and just in time for the halving too. So like we told you guys, we think that Coney is going to go up with the price of Coinbase, which is going to go up with Bitcoin during the crypto bull run. And that's exactly what seems to be happening. So support currently lies between 150 to about 175 a share. And then resistance is between 210 to about 228 per share. We had the breakout. We're right in above the EMAs. EMAs are fanning out. Earnings was good. Everything looks good. We're not overbought. So it is... we ourselves have purchased more Coney as a result of this. So let's now move into Apple. Apple is kind of sitting in no man's land. So your support's going to be between 172 to 182. Resistance can be between roughly about $195 to about $200 a share. I would say that this support zone is probably going to hold. As you guys can see here, it used to be resistance. It's very clearly support now. But this chart is not so certain as to where the direction is going. This breakout here was pretty obvious, but as to whether we're going to get another one or not to the upside, that is a little bit more difficult to say. So as of right now, we're still in that kind of sitting below that trend line and waiting to make a decision here. Amazon, this thing is clearly in a breakout. As you guys can see, there is potential that the RSI here is about to have a death cross, and we are in overbought territory. So there is that, and we're also hitting resistance. I would say that's a warning flag right there. So support is going to be between about 138 to 150 a share, resistance between 171 to 190 a share. But the overall trend is very, very bullish. I would say we had this breakdown out of the bear market, and then ever since then we've held this uptrend, and obviously we've lifted off of it and kind of skyrocketed up here. So Amazon is definitely a more bullish one in my opinion. So Google, believe it or not, even though a lot of people probably don't think Google is going to be very bullish, we've been very bullish on Google for a long time as a result of the AI narrative. Something I do want to point out to you guys here is the potential for a bearish divergence. Again, it's not really so obvious because it's very small here to see, but price is going up, RSI is moving down. That's generally divergence. We usually like to see it over a kind of a longer time frame, but this could be potentially a warning sign, and the MACD is about to have a death cross. So as of right now, I would say support probably sits somewhere between 130 to about 134 a share, and resistance between 145 to 153 a share, but overall the trend is still very bullish. Disney. So this thing just recently had a breakout. The RSIs have not hit the shade of green yet, so I would not say that's actually overbought yet. Or yeah, overbought. So you guys can see this massive wallop that Disney took. It just got absolutely destroyed. It went down by almost 50, 60%. It's just a crazy drop. But you guys can see that ever since we hit that support zone, broke that trend line from the downtrend, it's been pretty much up from there. We had this kind of channel here, and we broke very bullish out of it. As you guys can see, the price is just absolutely moonshot. So As of right now, I would say the support is between 77 to 94. Resistance between 113 to 121. I would say there's still a massive amount of upside potential for Disney here, but we need to turn this resistance here into support if we're going to move higher. And until then, I can't really say that this thing is going to go up anymore. So Meta, obviously you guys know that Meta just went absolutely bonkers between their earnings and, or I believe they had earnings recently. Let me double check on that. Yeah, so between their earnings, obviously their first dividend payments coming out, as you can see here. And between that and the dividend, we just went absolutely AWOL. And this current support or resistance is now turned into support very clearly, as you guys can see. Meta is at all-time highs. I would say that if we were going to buy this one, we would probably wait for it to at least come back down to this EMA because there's really nothing else to look at here. So 417 to potentially as low as 350 a share, I would say is probably a good place to start. Microsoft, also very similar. It's obviously in a massive uptrend, and this thing is also in price discovery. So Microsoft also hitting all-time highs, along with being above this trend line, above the EMAs, and above previous support. If we were going to get in, we would probably get in somewhere between the support zone, so about 350 to maybe 370 a share, maybe even as high as 375 a share. Netflix, this one's kind of hard to tell what it's going to do. I mean, it's sitting in resistance. It could go up higher. This, if we actually take a closer look at this is actually what I would consider to be kind of like a bull flag. It's very small. You can barely see it, but it's kind of a bull flag type pattern right there. It might be a little bit more obvious on the daily time frame if we look at that. But it doesn't really show as clearly as the weekly. And the reason why it needs to be the weekly is because obviously you have to have a pull for a flag, right? So there's the pull, there's your flag, and then obviously the breakout. If we measure the breakout on this, does it need to play out immediately? No, it does not. So just so you all know, this is kind of the general price target for what a bull flag would look like. So from the breakout point, that would be roughly your target. So roughly about $678 a share if it were to go up to that. As of right now, Netflix is very bullish. You guys can buy into resistance if you want to in Edfly, but me personally, I would not. I would wait for at least a pullback to the EMAs. So somewhere between 435 to 484. And then obviously the resistance is between 566 to 695. Just a measurement on that, kind of a rough measurement, would be roughly about 28% to 51%. That'd be a pretty juicy upside trade if you ask me. Okay, so NVIDIA, not much to talk about here. RSI is clearly overbought. Last time this happened, we did have somewhat of a pullback. We can measure that actually. So the pullback from the peak to the trough was not really a huge pullback, but it was 20%. Okay. So we broke out of this ascending triangle here, broke out of the previous resistance turn support and the EMAs here. And obviously this thing has just gone absolutely nuts. Earnings is right around the corner too. Also keep that in mind. So that's on the 21st of this month, which is actually next week. Let me actually look at the calendar on that. So yeah, that's going to be next Wednesday that you guys are going to have your earnings. So this thing is just massively overextended. This is one of the reasons why we got out of NVIDIA at 120 shares and reduced our share count to 30. Because if the pullback does come, which I think, in my opinion, based on technicals, pure technicals, it's due for a pullback. It could be a pretty large pullback. It could be as little as 16%. It could be as much as 27%. It could be even as much as, I would say, maybe up to 32%. That's a pretty big pullback. So we could obviously buy a lot more shares of NVIDIA if this thing was a little bit cheaper and then ride the next wave up. So Tesla, still looking maybe not bullish, but maybe not bearish. It's still trying to figure out what it wants to do. Maybe like a little bit more consolidation before we eventually move up and break past this trend line. Until we break past this trend line here, I would say that we're still kind of in neutral territory. Something I want you guys to keep in mind is this is massive support. So you have support here, then it was turned resistance, and now we're testing it as support. This is a very heavily traded zone, which means that most likely it's not going to slip through these support zones so easily. Plus, I also wanted to point out to you guys this. So we showed you guys this before, which is basically the rare buy signal that we got recently. So when it was at its low here, you can see the RSI was massively oversold. And then once the RSI and the MACD went bullish, price moved up from here. But why does this matter? Because every other time this happened, there's been a massive run up. So you can see we hit oversold territory here, got a golden cross here, got a golden cross here, and then you can obviously see what the price did. So price went from that low to the high up here, roughly about 37%. But that's not even the crux of it. So if we go back even further, that was just a small oversold signal. So this is the big one, basically the end of the bear market. You can see here December 2022, we got the golden cross here, and then obviously a massive move up on Tesla. I mean, this thing was huge, 184%. We went from $100 to about $300. And then if we go back even further in history, I can go back even further. I gotta go back quite a ways to find it. So you guys can see, where is it? Hold on a second. I'm trying to find this. I want to say pretty sure it's this one right here. So it hit, so this is the pandemic low. It hit this low here. You can see we got the golden cross. It's not really so obvious, but basically when the purple closes above the yellow, that's a golden cross. And then we got the golden cross here. And as you guys can see, the rest was history. I mean, we had a huge, absolutely monstrous first swing up, which was about 1,000%. So that's pretty much that on Tesla. If we take a look at Square, this is the underlying for SQUE. I'm going to zoom in here and try to scroll over to the right because we're really covering a lot of different historical data here. So I would say it's kind of stuck in a zone. I mean, this thing could move higher, could move lower. We got earnings coming up once again. We are in earnings season, so that's next Thursday. Obviously, if it's a bullish earnings, that's going to be good for the price. Pretty much what we're looking at here is we need to get a break above about $79, and then we need to get a close, obviously, above $89. But just to kind of give you guys like an overall view of just how high this could go. You see the previous all-time highs here? That was right around the time of the Bitcoin bull cycle top. So if we measure back in time, you guys can see this can go up as much as 333%. So almost a 5x, at least minimum 4x. So I would say going into the Bitcoin bull run, this is definitely a great position to have in Square or SQUE, just as kind of that Bitcoin play, but that's just my opinion. As for the immediate technicals, we're just kind of chopping around. I think the market's pretty much waiting for earnings to make its decision as to which way it wants to go. So ExxonMobil, we're getting a bounce here. That's obviously a good sign. You can see that we broke this downtrend. I would say it's probably going to look something like that. So we broke the downtrend, consolidated, which does happen before a potential reversal. There is also this inverse head and shoulders pattern here. I don't know if you guys can see it, but there is a left shoulder here, the head, and the right shoulder. That's a very bullish pattern. If we get a break out of that pattern, just to kind of give you guys the measured move, we'll just assume it breaks like at the end of this thing, be going back up to resistance, roughly about $114 a share. So that could be very bullish for ExxonMobil. And we just had earnings. So it was a mixed earnings, not really surprised there. I mean, you know, oil has come down a lot in terms of prices or the value per barrel. For this one, I would say kind of neutral on it, not bullish, not bearish. It's just kind of really stuck in no man's land in between support and resistance. Support being obviously $84 to 96, and resistance being between 115 to 121. At least the good thing about ExxonMobil is if you wanted to buy this, the actual company itself, they do pay a quarterly dividend, so that's something to keep in mind. So does JP Morgan. So we'll go over now JP Morgan. I'm going to switch back here to the weekly. Obviously, you guys can see that JP Morgan's earnings are coming up. That's in March. So JP Morgan is the RSI is kind of getting overbought, but I would say that if this thing at this point was going to pull back, it would pull back into this support somewhere. So the support zone is between 167 to 175, but obviously we're hitting all-time highs here. That is a very, very bullish sign for the bank, I would say. So ARK, this is a big one. A lot of people are invested in OARK. We ourselves are invested in OARK. Just to give you an example of what the Bitcoin bull run could do to the price of ARK and OARK, you can see the massive upside potential here. A little over 200%. That's a lot for a stock. Crypto, that's nothing for crypto, but for stocks, a 200% move is absolutely huge, just so y'all know. So we got the break of the trend line. We're sitting at resistance. Could it pull back? Yeah, but if it's going to pull back, it needs to crack these EMAs. Considering the fact that this thing skyrocketed up to resistance, got rejected, and then has bounced off the EMAs, I would say the likelihood is probably small that happens. But we'll just have to wait and see. So as of right now, support, macro support 28 to 36. Current resistance 50 to about 53, and the EMAs are between 45 to 48 per share. AMD, this one is cracking to new all-time highs. I'm pretty sure it's because of that AI narrative. Obviously, everybody's talking about AI right now. That's the reason why NVDA is moonshotting. So you can see this swing low to swing high, swing low to swing high. That's a very bullish trend there. So if we're going to have a pullback on this thing, and again, we are overbought on the RSI, it would pull back to this support. So it's going to be somewhere between 157 to 168 per share. This entire chart, in my opinion, is bullish. The only thing that could potentially be bearish is this overbought RSI, but that takes time to play out. So PayPal, still kind of sitting in this falling wedge. Obviously a very bullish pattern. If it breaks out, the target is the top of the wedge, so that's 102. The price, RSI, and the MACD are doing absolutely nothing whatsoever. We just had earnings. Earnings obviously were good, as you guys can see. So that's not the reason it's chopping. I think it's just chopping simply because that's probably what it wants to do, because it's sitting in resistance, doesn't know if it wants to go up or down. We're currently below the EMA, so I would say that part's bearish, but the macro support is between $30 to about $47, and your resistance between $60 to about $83. PayPal is, I would say, another bullish crypto play. Reason I say this is because you can actually buy and sell Bitcoin, Litecoin, Bitcoin Cash, and Ethereum last time I checked on PayPal. We ourselves have actually done this. So if it were to go back up to the highs, let's just say, just because of crypto alone, you could be taking a look at a massive 444%. That is huge for a stock, just so y'all know. Our average swing trade that we try to take profit on any given position is about 15%. So you're talking almost 30x that on just one trade, one stock. So here's Moderna. Let's take a look real quick, see if it has earnings. We do have earnings coming up, so this could affect the price. As you guys can see, that date is actually next week. That's going to be on Thursday. So just something to keep in mind there. We did have a breakout of that downtrend. You can see that white line right there. This was almost kind of a bump and run pattern. If you guys don't know what that is, go ahead and look it up for yourself. Just type in day trading and bump and run pattern, and you'll see what I'm talking about. But we had a break above it. Got rejected off the 51 EMA here and kind of have come back down to support. So I can't really say that's bearish unless it gets below this support zone, because the buyers could still step in here and decide they want to squeeze this thing to the upside. So support's between 65 to about $97 a share, and your resistance roughly about 180 to 220 a share. So as an added bonus, we're going to cover KWEB here, which is for the CLIP ETF. We are still sitting below this trend line. I want to zoom out here massively and show you guys that basically every single time over the last decade, I'm going to keep pointing this out until it's no longer true, which I don't think it's ever not. I don't think that this support zone is ever going to break. If I'm being honest, it's a decade-long support. So, but every time we've come into the support zone, it has been nothing but upside, basically more or less, as you guys can see. So from here to the swing high, it was about 78%. From here to the swing high, it was about 152%. If we count this, which is technically not at support, but we'll count it anyways, that's basically 166%. If we actually go from this swing low to the true swing high, that would be roughly about 297%. And then this most recent one, you guys can see it wasn't as big, but it was still pretty large, about 67%. And then this swing low to this swing high was about 107%. And I know what you guys might be thinking. You might be like, well, this swing low right here was higher than this swing low. Yeah, that's true. It's not a perfect science, okay? So you had about an 18% pullback, but ultimately you got about an 81% upside. So obviously it's a 4-to-1 risk. But I would say the most bullish thing is that we're in the support zone, and at some point here, we probably are going to get a break of this trend line to the upside, would be my guess. Especially with a lot of countries trying to potentially move away from the dollar because, the dollar, everybody thinks is being hyperinflated because of the stimulus and so on and so on. So we're still very bullish on the dollar, but realistically, when the Fed cuts rates, the dollar is going to lose value because people that are sitting in cash are going to move their money over into risk on assets. So support's between 18 to 26 and resistance is between 68 to 79. Anyways, this is our weekly update on the underlying stocks for the YieldMax ETFs. Hope you all enjoyed this content. Please let us know which YieldMax ETF you're bullish on. Our personal picks that we're the most bullish on going into crypto and into the future with AI. If you guys are wondering, our 3 top picks are Coinbase for the crypto bull run mainly, but also Tesla and NVDA. So, anyways, like, comment, and subscribe, and we will see y'all later. Peace.